Airbus is a global leader in aviation, building everything from the nimble A220 to the double-decker A380. As a European powerhouse, Airbus competes head-to-head with Boeing, driving innovation and shaping the future of air travel. Its commercial aircraft division is the heart of the company, designing and delivering planes to airlines worldwide. But Airbus is more than just passenger jets. It also leads in defense and space and helicopters, making it a true aerospace titan. Tens of thousands of skilled workers across Europe design, build, and test these complex machines. The company's performance is closely watched by investors, governments, and the entire travel industry. When Airbus thrives, it signals strength in the global economy and travel sector. But when it stumbles, the effects ripple far and wide. In early 2026, Airbus faces turbulence, production delays and delivery challenges threaten its momentum. Understanding these issues is key to grasping the current state of aviation and what's next for this industry giant. The company's reputation for quality and innovation has earned it the trust of airlines, who order new planes years in advance. But now, that trust is being tested as Airbus navigates a period of uncertainty. The world is watching to see how this aviation giant responds. The stakes are high, not just for Airbus, but for the future of global air travel. The next chapter will determine whether Airbus can maintain its leadership in the skies. Let's dive into the challenges and opportunities facing Airbus in 2026. The first quarter of 2026 has been rough for Airbus. Production lines are busy, but deliveries are lagging. Planes are built but not reaching customers. This delivery bottleneck means delayed revenue, as airlines only pay in full when they receive their aircraft. The result: completed jets sit idle, waiting for final parts or repairs. Imagine a car factory where every vehicle is missing a steering wheel, finished, but unsellable. That's the reality at Airbus, with a growing backlog of undelivered planes. The demand for new aircraft is strong, but Airbus is struggling to meet it on time. The causes are complex global supply chain disruptions, quality control issues, and a cascade of small problems adding up. These challenges have created a perfect storm, testing Airbus's ability to deliver. The company must now navigate this turbulence to restore confidence and keep its order book moving. The first quarter has become a lesson in how fragile and interconnected modern manufacturing can be. Every delay in the supply chain or quality check ripples through the entire system. For Airbus, the pressure is on to clear the backlog and get planes flying. The world's airlines are waiting, and so are investors. The next few months will be critical for Airbus's reputation and financial health. Can the company overcome these hurdles and get back on track? The answer will shape the future of global aviation. The financial results for early 2026 reveal the impact of Airbus's delivery delays. Revenue dropped by 8% to around $12.4 billion, a significant setback. Adjusted EBIT, a key profit measure, fell sharply to just $311 million, with profit margins squeezed to 2.5%. The root cause? Fewer aircraft deliveries, only about 114 planes, down from 136 a year ago. Each undelivered jet means millions in lost revenue and mounting investor concern. This nearly 20% drop in deliveries is the statistic that worries the market most. Lower profits mean less money for research, development, and future innovation. The company's stock price and investor confidence are under pressure. Management faces urgent calls to fix the delivery pipeline. The numbers are a wake-up call. Airbus must act fast to restore its financial health. The backlog of undelivered planes is more than a statistic, it's a challenge that must be overcome. The rest of 2026 will be a test of Airbus's ability to recover and deliver on its promises. The stakes are high, and the world is watching. Can Airbus turn these numbers around? The answer will define its future. At the core of Airbus's troubles is a strained global supply chain. Building a modern airplane requires millions of parts from thousands of suppliers worldwide. If even one critical component is delayed, the entire assembly line can stall. In 2026, many suppliers are struggling with shortages of materials and labor, slowing Airbus's production. The just-in-time model, once efficient, now exposes vulnerabilities. When it breaks down, chaos follows. Airbus factories are ready, but often waiting for missing parts, leading to costly inefficiencies. Partially built planes fill factory space while workers stand idle. The company is working to strengthen its supply chain, but the challenges are persistent. High demand for new, fuel-efficient aircraft only adds pressure. Solving these issues requires close collaboration with thousands of partners. It's a massive, ongoing effort to stabilize the entire industrial ecosystem. The supply chain squeeze is a reminder even giants like Airbus depend on every link in the chain. The commercial aircraft division is Airbus's main engine, and right now, it's sputtering. Delivery delays and supply chain issues have hit this division hardest. Revenues are down 13%, and operating profit has slumped to just $75 million. Lower production volumes mean higher costs per plane, eroding profitability. The mix of delivered aircraft has also shifted toward lower-margin models, squeezing profits further. Heavy investment in research and development continues, but with lower earnings, the financial strain is clear. Rows of nearly finished jets parked and waiting for delivery symbolize the division's struggle. Test flights continue, but the final handover is stalled by missing parts and quality checks. The backlog is growing, and clearing it is slow and costly. The commercial aircraft team is racing to resolve these issues, but the road ahead is tough. The division's performance is crucial to Airbus's overall recovery. The world is watching to see if this engine can roar back to life. While commercial aircraft faces headwinds, Airbus's other divisions are steadying the ship. Defense and space is expected to grow revenues by 8%, thanks to strong demand for military and space technology. Helicopters is also on a growth path, with revenues up about 4% and new orders coming in. These divisions have their own supply chains and customer bases, making them less vulnerable to the issues plaguing jetliner production. Their stable performance provides a crucial financial buffer for Airbus. Diversification is working. These divisions keep the company resilient during tough times. While headlines focus on commercial aviation's turbulence, defense and space and helicopters are flying steady. This balance gives Airbus the breathing room it needs to fix its biggest problems. The company's future depends on all three divisions working together. Beyond supply chain woes, technical issues are causing major delivery delays at Airbus. Panel defects and repair backlogs are the main culprits. Even after assembly, planes must pass strict quality checks. Any defect, no matter how small, must be fixed. These repairs create a queue, with completed jets waiting for their turn in the repair hangar. The result? A traffic jam of planes parked on airfields, tying up space and resources. Skilled technicians are diverted to fix these issues, adding cost and slowing production. Clearing the backlog is now a top priority. Airbus is working to prevent defects and streamline repairs, but solutions take time. In the meantime, delays persist, frustrating customers and straining operations. The complexity of aircraft manufacturing means even minor flaws can have massive impacts. Every delay is a reminder of the precision required to keep the skies moving. Despite short-term setbacks, Airbus's long-term outlook is strong. The company's order backlog stands at a staggering 8,800 aircraft, enough work for a decade. Global demand for air travel is booming, especially in emerging markets. Airlines are eager to modernize fleets with fuel-efficient models like the A320neo and A350. Environmental pressures are driving demand for newer, greener planes. Analysts remain optimistic, expecting a rebound as supply chain and repair issues are resolved. A surge in deliveries is forecast for the second half of the year. The fundamentals are solid. Airbus is well positioned for future growth. The current turbulence is seen as temporary. The horizon looks bright for this aviation giant. The first quarter of 2026 has tested Airbus like never before. Delivery delays and supply chain snags have hit revenues and profits hard. The root causes, strained suppliers and quality defects, have created a backlog of grounded jets. Yet, Defense and Space and Helicopters divisions provide stability, cushioning the blow. The long-term outlook remains strong with soaring demand and a massive order book. Airbus's path forward is clear: fix the supply chain, clear the backlog, and ramp up deliveries. Experts expect a rebound later in the year. The turbulence of early 2026 is a serious challenge, but not a permanent one. With focus and determination, Airbus is poised to return to clear skies. The world is watching, and the next chapter is about to unfold.